What does cap rate mean in real estate investing and why it's important to you to know? In today's episode, we're going to be showing you how to calculate cap rate. Then we're going to show you how to increase your cap rate and get more out of your buy or purchase. And then at the end, I'm going to break down 4 factors of what a good cap rate is. Cap rate estimates your potential return on investment when looking at and evaluating commercial real estate. It helps you compare real estate assets. Cap rate is used in conjunction with a few things. You need to know what the gross revenue is, all your costs associated with that asset, including management fees and other expenses. And then you need to factor in vacancy factors as well. That will give you your net income, and you could back into your cap rate using those numbers. For example, if we took $1 million asset, that's what someone's looking to get, or maybe that's what you're purchasing it for. Then you have your gross income of $100,000. That would be roughly 10% if you had no other costs. Now we figure in, usually factored in by a percentage, your expenses. We're gonna use 20%, and then we have a 10% vacancy factor. That takes us down to $72,000 from that $100,000 mark, or a 7.2 cap rate. What's the importance of this? The higher the cap rate, the better the deal is for you as a buyer. The lower the cap rate, the better the deal is for you as a seller. It's important that you understand these things, because the one thing that we didn't factor into this was the interest rate. If you were to put debt on it or a mortgage, now we have to factor that into the equation. So if you're buying something at a 4 cap rate and your mortgage is at 4.5, you're technically losing money. This is not an investment you want to do. So what you should look at is a higher cap rate, right? And then deduct your mortgage if you are in fact putting debt on it. One of the other key factors that I look at when I'm looking at the cap rate, because maybe it's low, I don't want to run from the deal, I want to understand it. A couple things that I want to look at. What are the current market rents? Are they undervalued? Also, what's the vacancy of the property? Maybe it's a 6 or 7 cap, and I'm kind of iffy on it, but maybe it's a 50% occupancy. So you got to look at those things and put those into the equation when determining, is this an asset that you should be looking at and buying? Also, when looking at the vacancy, why is there a vacancy? These are the questions you have to ask and look at. If you become good at it, you could find the blind spots other people aren't and capitalize on that. Oftentimes, I'll see listed very high cap rates, maybe 15% cap rates. But when you look at that asset, or you look at what property that is, there could be multiple things going on. You could have a business that is inside. Maybe it's a behavioral health center. You got to take into consideration the operating expenses when determining these things. So maybe that 15 cap rate is now maybe a 2. Take these things into consideration when you're looking at and evaluating properties and using cap rate as a matrix. One thing that I like to do to increase my cap rate when I buy a property, I like to try to reposition it. This means I could give it a facelift, or I just simply change the use. Also, one of the key things, or one of the things I very first got started in commercial real estate that I still do today, is I increased the price per square foot that I rent for. What does that mean? I buy offices and then I do executive suites. This allows you to get a much higher rate of return on the property, sometimes threefold. You got to take a look and figure, is this the highest and best use of the current property, or is there a better use where I could get more income out of it? In doing so, you could take a 5 cap to a 15 or 20 cap and capitalize on that as well. The reason why cap rate is typically used in commercial real estate versus residential is residential, with the exception of multifamily and maybe on a vacation rental. Typically, cap rate is only used on commercial assets, and the reason being is because people are looking at that asset class and trying to determine where they could deploy the money and what's the rate of return. On usually residential housing, it's people looking to buy, maybe buy and rent, but they already know the rental market and it's probably not used as a rental at that time. And if it is, maybe they've figured out that cap rate for you. Before we get into the 4 factors of what is a good cap rate, click on the button below and subscribe. There are 4 factors that could affect your cap rate. One is the location. You want to look at the supply versus demand of what asset you're looking at. This is going to play a big factor in your cap rate and making sure that you're always rented out and getting the maximum dollars out of it. Number 2, current rents versus projected rents. Oftentimes we see people that their rents are just too low. They haven't adjusted them. You need to take these things into consideration and look how long of leases that are left with the people that are in there. Maybe they're on a month to month, so you could renegotiate those leases and take those over and get them back up to market price, increasing your cap rate. 3, what's your risk tolerance? Can you afford to have a low cap rate, or do you have debt on this and you have to make sure that this thing cash flows monthly? Make sure that the margins are there and make sure that you're making money if that's the case. The 4th thing is future appreciation. You want to make sure that you're in an area that has that demand and that you get the appreciation from that particular asset. You could change the cap rate by giving your property a facelift, increasing the rents and getting more demand for it. You could also bring down your costs. Sometimes there's more cost involved because people get a little bit heavy as far as management goes. Look at all these things when you're evaluating and looking at cap rate, especially on commercial real estate. If you're looking at this, you may want to also take a look at how to find tenants for commercial real estate. Click on this video and I'll see you there.